Folks, I hope you're all doing well. So we're going to look at the upcoming week and what is it that we are looking at in regards to the upcoming week. So I'm going to look at a few currency pairs, and including probably gold and oil, and also dollar index. So yeah, let's get on to it. So looking at the calendar in the upcoming week, we've got quite a calendar that's filled with high impact 2-star, 3-star fundamentals, and across all major pairs. So could be a good week for day traders. Could be a good week for day traders. So on Monday we've got FOMC members speaking. We also have people from the Bank of England, and later towards New York close, we've got CPI for New Zealand. Then Tuesday, we've got pound news, high impact, dollar news, high impact, and all the way into Wednesday. So there's quite a lot of high impact news, which should give us opportunities in the markets. So we're going to look at dollar index to start with. And I'm just going to do like a proper analysis on dollar index from higher time frame, monthly point of view. As you all know, we've got this fair value here on the monthly chart. So now that we've got a new high for the month, that's the one we use in relation to our starting point of this imbalance. And what we have seen now, the month of October and the high of August, we now have a fair value range for long opportunities, right? So looking ahead into that, where is liquidity? Where are we anticipating market to trade to? So we recently closed above this high here, which makes August a bullish breaker, right? That makes August a bullish breaker. So we are talking of 105,480. So 105,480 it's going to be an ideal. It's going to be an ideal range for you to be looking for long entries. That is, if there's a protraction phase towards that pricing point. What do I mean by protraction phase? I mean, like if there's a retracement towards the 105,480 zone, right? Preferably, you'd want to see, if you're doing your day trades, you'd want to see price retest, obviously discount areas from, say, the previous week, or imbalances from the previous week, because that's going to provide you with enough impetus for you to go to the upside. Now, the thing you need to understand is right now we've got Federal Reserve leaning more towards a hawkish outlook for the economy and for the dollar, to be precise. So we've got a more hawkish Fed, though there are some members who are not quite decided yet, but most of the members from the Federal Reserve, they're looking at a more hawkish scenario for the dollar. We're not yet hearing anything in regards to soft landing. The moment you start hearing anything in regards to soft landing, then we know that the dollar is now going to face some huge sellers. There's going to be some huge sellers getting into the dollar. That's when we should only anticipate dollar to drop to the downside once we have something to do with the with soft landing from the Federal Reserve. But as it is, yes, we should lean more towards a bullish dollar. Now, that's the main aspect. That's the main approach you need to have. That's the main approach you need to have when you are trading dollar. Trade dollar with a bullish approach. So that's from daily to your H4 to your hourly intraday trades. And for scalping, scalp dollar only on positive fundamental release for the dollar or on a negative fundamental release for the dollar. Right. So when we go to we've already highlighted the two PD areas on our monthly chart. Of course, we've got the current high and the current low. We all know what resides above highs and below old lows. We've got liquidity, sell stops below, and then above the high, we've got liquidity, buy stops, specifically external range. We've got external range of buy stops above the current high, and we've got internal range liquidity in the form of sell stops below the current month's low. So when we go to a weekly chart, when we go on to a weekly chart now, what you need to see in regards to the weekly chart is the willingness of the market to go to the upside. Because if you don't see that, then you just need to be a bit cautious in relation to your long positions on dollar. You can see this is last week's price action. We had dollar drop into discount. What discount area do we have here? Fair value gap, old high. We've got a weekly bullish breaker right here. Weekly bullish breaker, price came into that range and shoot to the upside. This was facilitated mainly by CPI release on Thursday. That's when we saw dollar push to the upside. So with that in mind, you already know that right now price is being drawn to previous week's high, right? Previous week's high, which is coming in right here. So previous week's high, we've got external range liquidity of buy stops, external range liquidity of buy stops above that. So we're likely to see price trade above this range. So the reason why I put an X, for those of you who don't understand my analysis, it's because there's untapped liquidity. The price hasn't traded above, right? So below, you can see previous week's low was traded through, price dipped into discount, and then it moved to the upside. So with that approach in mind, you now just have to be in a position to understand where exactly is price looking to go to. This range here that I'm highlighting, right? That's like your short-term outlook in terms of where dollar has to go, right? Your short-term outlook. So we're looking for that monthly fair value gap to be filled. But this equilibrium point on the weekly imbalance, on the weekly fair value gap, right here, coming in at 108.365. That range, that equilibrium point of price is most ideal. That's your most ideal price point for your targets, right? So we'll be looking for dollar to trade to that level. I'm sure once we have the monthly fair value gap filled, then we're likely to start seeing a weaker dollar. Once we have the monthly fair value gap filled, we're likely to see dollar trade to the downside. So with that in mind, make sure you only hunt for long positions on dollar after a positive release. So you already know that we've got a weekly calendar, right? So what you have to do now is highlight all the fundamentals that are going to affect dollar, right? Once you highlight the fundamentals that are going to affect dollar, right? Let's say, for instance, on Tuesday, right? On Tuesday, we've got retail sales for the dollar coming in at 2. We've got retail sales, core retail sales, fundamentals, and those are going to affect dollar in a massive. There's going to be expansions on dollar index, which will result in opportunities on all major currencies. So the chances of dollar trading into discount towards this release, the chances of dollar trading into discount towards that core retail release, we don't know. But if we do have dollar in discount ahead of the retail release, then you need to lean towards a positive retail release. Then price will dip into that discount for a push to the upside. So you can only see that once you go to the daily chart. So now we're on the weekly chart. Price has already found support inside the weekly fair value gap, right at the bullish OB, right? Price has already found support. Then when you go to the daily, see there, that's price finding support on the weekly fair value gap, right? Now remember, we've got our monthly discount area here, the gray shaded area, right? Once you're on the daily now, you can clearly see price has got nice fair value gap here for your long opportunities. Now, once price has found support on a weekly PD area, right now, it's a fair value gap on the weekly. Once price has found support and you have seen that, right, you need to see an expansion, a huge expansion, the willingness of the market to go to the upside. That's from discount. Once you see that, we already have a high and a low. That expansion now, when you grab your fibs, right? When you grab your fibs from high to low, from high to low, right? What are we doing here? We are basically defining our discount range. Our discount range starts from, say, equilibrium point towards the 79% retracement level, you see? So that when you go to the H4, when you go to the hourly chart, you already have PD areas inside that range. Now take note of the daily fair value gap that I've highlighted, because it's going to be very important when we approach next week. So what I would mostly likely to see in the coming week, right? We've got a calendar. Tuesday, we've got retail sales. Wednesday, we've got CPI for Europe. We've got building payments. We've got crude oil inventories. And then Thursday, we've got fake share power speaking. See, we've got the Philly Fed Manufacturing Index. We've got initial jobless claims. They come out every week, those ones. So once you have that, you already know, okay, Thursday, we've got power speaking. What are the chances of dollar being inside the discount range that we have defined here heading into Thursday? And knowing for a fact that we've got a more hawkish Fed. And when Powell is speaking, he's going to lean towards that scenario. Unless if there's something that changes drastically in the markets, then you just have to be in a position to react in that manner. So I'll be looking for price to fill up this gap all the way to the 62% retracement level or somewhere thereabout, and then trade back to the upside to take out this liquidity above this old high coming in at 107.047. You see, so that's my weekly outlook on dollar on the daily time frame. So once we go to the H4 time frame, you see, this is the expansion that I'm talking about, the willingness of the market to go to the upside. If you look closely on this chart, this pattern is repeated here. We had price dropping down here into fair value, our weekly fair value gap, and there was an expansion to the upside. See how price reacted when it came back. It ran stops, previous old low, price ran the stops, then it expanded to the upside. The same thing, looking for price to now drop towards 105, anywhere below 105.922. Then we get, say, a positive retail release, you see? A positive core retail release, then price is going to find support if price is in that range ahead of that fundamental release. So already on the H4 you can now clearly define where is liquidity. One old low, right? There is a liquidity range there. We also have fair value gaps on the H4 chart. I'm not going to mark out this because it's going to make the chart look too noisy. But if you're scalping, yes, then you need to mark those imbalances on the H1 and H4 chart. So in a nutshell, that's the analysis for dollar. We're looking for price to go to the upside from anywhere around 105.922, 105.77, and ultimately our optimum trade entry coming in at 105.657. So those are the price points that you need to focus on heading into next week. But things can change. Things can drastically change with whatever is happening in Middle East. So the opening of dollar is going to be crucial. I'm not sure we're going to get another jump like last week. I'm not sure we're going to get there. But if that does happen, then that might change our approach to this asset here. Then we want to look at Euro USD, Pound USD, Aussie dollar, and probably gold, because gold has got a very fun price action right now on the daily chart. But once you know already your approach on dollar index, right, leaning towards more long positions on dollar, expecting dollar to appreciate in value again heading into next week, that inversely affects euro, see, in a negative way, meaning we're going to be looking for shorting opportunities on Euro USD. So once we go to Euro USD, I'm not going to do the monthly chart analysis on this, but just a rough guide for those who are not used to my approach to the markets. You can already see here we've got fair value, right? Premium area for shorting opportunities. We've got imbalance here, fair value gap to the downside. That's our target for shorting opportunities. Got external range liquidity of sell stops here, internal range liquidity of buy stops above the current month high, right? So once you go to the weekly chart, you can see the price filled up this weekly fair value here last week with our weekly fair value. Price filled up that fair value. Now we're looking for price to trade towards this level here. We're looking for price to trade towards, let me get the proper price point. We're looking for price to trade towards 1.0222, right? 1.0222, that's huge weakness for the euro against the dollar. Yes, it's highly possible. We're only just above 105 at this moment in time. So when you go to the daily chart, you can see it's exact mirror image of dollar. We've got our premium area there in the form of fair value gap, and we've got also a bearish order block, right, on the daily chart. Bearish order block. So you're looking for price to test the equilibrium of the fair value before a push towards the previous old low. Okay? That previous old low coming in at around, let's see the price point, 1.044777. Okay? 1.044777. That's where price is mostly likely to be drawn to on positive news for the dollar, right? So what could push euro to the upside? What could push euro into a retracement? Now you can see here the willingness of the market going lower from premium has created an expansion, right? High to the low of the expansion on the daily chart. We've got our premium range above 1.056 all the way to OTE at 1.05965. That's our premium zone. where we are going to be hunting for shorting opportunities anywhere between 1.05670 and 1.05965. That's your range for looking for shorting opportunities. Targeting which area? Targeting right there. The 1.04478, you see. That's like the weekly target on Euro USD. Looking at Pound USD also, we're going to go to the daily chart, right? Where we'll be hunting for shorting opportunities on Pound USD. That's our bearish order block. Now, this bearish order block is high probability, folks. That's a high probability bearish order block because it's accompanied by a fair value gap, right? So we're looking for price to got our swing high to the current low of the expansion, right? So we're looking for price to go short around 1.2254, 1.228, 1.2273. That's your shorting opportunity range on Pound USD. Now, you're in the mentorship, you already know what to do. I'm not going to explain further to say you can see that there's a fair value gap right here. You see, I'm not going to go into that. You should know that by now. We've got our bearish order block right there. Though it's not a high probability bearish OB, but this could be good for scalping shorting opportunities. You scalp shorting opportunities here after a negative news release for the pound or a positive news release for the dollar. Then coming to also Aussie dollar, same applies. Looking for shorting opportunities. You see, already you've got a fair value range there for your shorting opportunities, right? Aussie dollar might have already shown us what NZD still has to do, right? We haven't traded below any previous old low on the daily on NZD, but you can see there on AUD USD, we have already traded below, what is this candle's low here? 62845, and here we've got 62851. That's our current low on Aussie dollar. So this candle is lower than NZD USD. So you can already see where NZD USD is going to trade from. Talking of NZD USD, right? If you go to your monthly chart on NZD USD, if you're in the mentorship group, remember this level here that was highlighted for you guys to say, we're going to see price take out this liquidity. That was last week's focus, and price did trade above, then boom, now it's going to the downside. Where is it likely to trade below? Right here. We're looking for price to trade below 0.58579 on NZD USD. From which level now? You go to your daily chart. There's your fair value range. Inside this area here, you're looking for price to trade below this odd low here. You go to your H4. You can see that's the range that you are looking at. Anywhere inside this pressure area, particularly the equilibrium point. You see, 0.59663 would be ideal for you to be looking for shorting opportunities. Looking now on USD CHF, we're going to be looking for long entries here, and price is right in discount, right? Price is in discount on USD CHF at a time when dollar is running riot to the upside. USD CHF is in discount. So that's an easy one. Euro USD CHF is going to go to the upside. USD CHF is going to trade to the upside from weekly discount range. You can see there, we are already seeing price finding support. Now, you see this expansion here. This expansion is exactly what I'm talking about. That's the willingness of the market to go to the upside that I'm talking about. From high to low, price has already found support inside the weekly fair value gap. Then on H4, we've had an expansion from that weekly fair value gap, meaning price has found what? Support. We didn't see that here. There was just consolidation. But this expansion now, once we have an expansion, once we have market showing us the willingness to go to the upside, then you define your discount range. Discount range coming in below equilibrium, 62% and optimum trade entry. Look what happened. Price here at optimum trade entry. Boom. We're looking for price to go to the upside. So USD/CHF right now, anywhere above 0.987. That's your target for longs on USD/CHF. As for USD CAD, right? Let's go to USD CAD. Let's go to the daily chart. You can see USD CAD also. Let me go to the weekly. This is a weekly chart. We filled the weekly fair value gap. You can see this high. Okay, let me clean this up for you guys. I'm just gonna run through this so that the video is not too long for you guys. I'm just gonna run through it so that it's not too long. So once the current, you see the previous week, when it opened, there was a gap, you see, when the weekly chart opened, and we feel that gap in price is now pushed to the upside. Where is price likely to trade to in the coming week? This old high here, you see, because we've already tapped into our internal range liquidity of sell stops. Now we're looking for price to run to the upside. You see, this is going to be helped by a strong dollar. A hawkish Fed will result in a bullish USD CAD. So when you go to the daily chart, you can see the CPI came in, price went to the upside. This was the gap I'm talking about here, right there. Now look at this, high to the low. Below the equilibrium point, we've got our what? Our discount range. You see, we've got our discount range. Once we have a discount range defined, then you've got your area of interest, your point of reference for looking for shorting opportunities. You see, you've got a range for looking for shorting opportunities. Why do I say this expansion? If we go to the weekly, we've had price finding support inside a weekly fair value gap. If you go to the monthly chart, that's the monthly chart. Price is expanding to the upside. So you need to be hunting for long opportunities when you go to a lower time frame. This is on H4, right? You see, that's an H4 fair value gap, right? Now, price was consolidating here and impulsively moved to the upside. Now, if we are to use this current expansion here on the 4-hour time frame, from low to the high, equilibrium point below that range, that's our discount range for long entries. So you're looking at about 1.3622, 1.3612, and OTE coming in. Okay, let me get rid of this so that's a bit clean. Let me get rid of that. OTE coming in at 1.3612. All right, you're looking for price to dip down into this area and then expand to the upside. You see, that's what you should be hunting for when you're looking at USD CAD. And then finally, let's look at gold, right? So gold eventually expanded to the upside, you see. And the current market conditions, they don't usually happen where you have a strong precious metal and a strong dollar. One of them eventually is going to give in, right? And at this moment in time, I'm not sure which one, but one of them is going to give in. So I would advise be caution when you are trading gold. I know a few guys in the group that like to trade gold. So just be cautious when you're trading the precious metal, because the way it reversed on the weekly chart, remember, in institutional supply and demand, that's a V return. See, that's a V return to the zone. Yes, price did trade away from demand, right? Bullish order block. That was to be expected. But the way price traded through this breaker, you see, the way price traded through this bearish breaker, and now it instantly reversed. You just need to be cautious when you approach the precious metal, because as it is right now, this price action is quite confusing. We still have imbalance here that was left with the gap from previous week's opening price. Brent played out very well. We had priced it into the vacuum and then boom, moved to the upside. Now we are trading right at a daily bearish order block, a high probability for that matter. So any cool down in the Middle East conflict, any positives from that. But if Israel keeps on bombing Gaza, then precious liquid is going to rally to the upside. So yeah, that concludes this week's forecast. I hope you learned a thing or two from the analysis. So yeah, we could have a very interesting week in terms of expansions, in terms of where market is going to trade to. We might have quite a few textbook setups in the market. So just be mindful of what you're trading and make sure you always trade in the direction of your higher time frame analysis. So yeah, that's pretty much about it, folks. And I wish you guys happy trading, all the best the coming week. Thank you.